I'm your host, Dino, and get ready to be inspired as you learn exactly how to own your role. Hey, everybody. Welcome again to the Own Your Role podcast. I'm your host, Dino. Excited to have you here for another episode where we're talking to unique entrepreneurs to help you understand your business a little bit better, understand yourself a little bit better, and figure out the best practices to where you can scale and grow your business faster. Well, as always, I want to thank you all for listening to the show, who have subscribed to the show, and you've got a little notification knowing that this episode has been released, which we release an episode at least once a week. And I just want to say thank you again for those of you that have shared this with your colleagues and friends because you found value in it. I was just at a conference just the other day, had a doctor come up to me and say, hey, I listen to your podcast all the time. I love the shift that you've made with Own Your Role from Propreneur, and just gave some great compliments. So I really, really appreciate all of that. It makes me want to continue doing this every single day. Today, we have a very special guest with us who is all the way from the other side of the country from where I am, as you all know. Joe Camberato is somebody who's going to talk to us about how to grow fast in your business. And I think a lot of times when we think about growing fast, people get concerned, right? They think about the get rich quick schemes. They think about oh no, I don't want to, I want the slow and steady wins the race. But actually most things in my life, I want to see quick results. I want to make sure that I'm getting the right people around me so that I'm getting the right advice so I can get those quick results. And I think that's what we're going to hear today from Joe, and a lot more, as we always do. So thank you for being here once again, and let's get started with this show. Joe, welcome to the show.
Thanks, Dino. Thanks for having me.
Yeah, I'm thrilled to have you here and love looking at your bio. And I'm so glad we were connected the way that we were, because you have a very unique, I think, skill set that we're going to get into around raising capital and helping entrepreneurs actually see the best path for them for success. But before we get into all that, one of the things that we do on this show for every single person is I believe that stories connect us all. So I'd love to hear a little bit about your story and where you come from and why you decided to get into this world, and especially the crazy world of being an entrepreneur.
Yeah, it takes unique individuals. I think entrepreneurs all have some sort of uniqueness to them. You got to be a little crazy too to fight the good fight. I was, prior to, becoming an entrepreneur, I was always in sales and in the mortgage business. I had a lot of customers that were self-employed. I used to help them with their mortgages, and a lot of them, I was watching them refinance their homes and use home equity line of credits to fuel their businesses. And I was interested in moving into the commercial side of the business, and a lot of those entrepreneurs that I worked with on their home stuff all kept asking me for business loans. And this is going all the way back to like 2005. And I really didn't understand why they just couldn't go to a bank. And I saw they had great businesses, great homes, and why don't you just go to your bank? And they would all share with me how frustrating it was. I started to, just with the relationships I had, try to like help them, obtain some capital for their business. And I found how challenging it was. My first deal was a local catering wedding hall business. I went to a bank. They laughed at me and said, we hate restaurants. And I said, well, do you know anyone that, would do this deal? And they pointed me to this private lender who sent me to another private lender. I ultimately funded the deal, and I watched the entrepreneur grow their business. And at the same time, I also uncovered this whole world of private lending. And it really was interesting. And I started helping one client at a time. And there was really no brand name or any, there was a lot of mortgage brokerages, but there was no business loan brokerages, places that you can go and where people were doing it at scale, or big recognizable brands that, would kind of help you, find that right lender. So I set off to go and do that, in 2007, right into the 2008, 2009, financial crash. So what a heck of a time to start a business. What a heck of a time to start a financial business. Yeah. Super scary, house on the line, credit cards, 401k. I mean, literally you name it, everything was into the business, and powered through that. And, this whole alternative lending, private credit boom happened. It kind of what's going on even right now as banks kind of pulled back and tightened again.
Sure.
So I really, doubled down with working, and building the business. So, National Business Capital, was founded in '07. We fought through that recession and, really went on to build, one of the nation's, top leading, really business loan platforms. And we've helped connect owners to over $2.5 billion in capital today. Wow. We have over 75 lenders on the platform. We've built out amazing tech processes, systems, and have become a time-saving machine for entrepreneurs. But most importantly, we have an awesome culture, a really great team of people, 75 or so folks in office, and then a number of folks remote. And you apply in one place and you can access SBA loans, term loans, lines of credit, equipment financing, asset-based loans, every type of financial product that's out there around businesses. We've got great lender relationships, and a great team, and which really is what it takes. And it's kind of crazy, because we're kind of seeing, really, like when I got started, it was such a challenging time, and you're seeing really credit tighten again, and everything. I mean, if you read the news, Wall Street Journal, CNBC, there's everything is all the talks now private credit, and this is from. When people hear like non-bank lending, private credit lending, alternative lending, it's all the same thing. All that means is it's someone lending money outside of a bank.
Yeah, you're not going to be a B.
Yeah, correct. You're not going to any of the big brand names for the most part. And a lot of people have this negative connotation when you hear about private lending. They think, oh, it's only for people in bad situations. Well, we work with companies that do $1 million in revenue, and we have a deal that we're working on right now that's doing $100 million in revenue and needs $10 million. They're tapped out at the bank. They're a great business. They're extremely profitable. They've got an amazing opportunity that they need to move very quickly on. And their long-term great relationship they have with a bank is just it's not the option right now. So they're going to keep their bank in play, and we're going to help them with some additional capital outside of the bank. And they're going to be able to execute on their profitable opportunity. So, it's a really interesting world. And some of these companies are large publicly traded institutions, to just smaller privately held, and then everything else in the middle.
So I wanted to get onto a few of the things that you talked about here, because first of all, I really appreciate that you said, most importantly, we have a great culture. Now, for those of you that have listened to this for any amount of time, that's my main focus, right? I think a lot of people put so much focus on the hard skills, which is great. We all need the hard skills, but it's the soft skills, quote unquote, soft skills, that really put the gasoline into the engine of any company. Because if you're dealing with people who are competent, excited, engaged, advocates for you, then it makes your life so much easier. So I'm so glad that you focused on that. And I have a couple of questions here around like specialization and money being more expensive and things like that. But I want to kind of come back to the culture part of it. Is this something that you've always been passionate about? Is it something that you actually had to learn the hard way? How did you make sure that there was a specific culture created in your business?
I don't know if it was something I was always passionate about. I am now. Culture is an interesting, buzzword. Now culture can mean a lot of different things to a lot of people.
Yep.
There's not really a simple way to describe culture, I think, to someone. It's really what you do. It's not what you say. I think, did I learn the hard way? Yeah. I was building a business, and I think, and most entrepreneurs that are listening will appreciate this. You start off, I wasn't this Harvard grad, or, I didn't go to like a crazy business school. I didn't work my up a corporate ladder and then get implanted as a CEO. I, was, a hard worker that, wanted to, build my own business, and just went and did it, and learned everything and had to figure it out, and I think even if you go to Harvard, or to a great business school, and I'm not knocking that at all, it's one thing to go through that, then it's another thing to actually physically do it. And I think everyone learns those lessons. and they don't learn them until they go through them. So, you build a company, you have, you, and then it's 1 or 2 people, then it's 5 people, then it's 10 people. And then you kind of hit 15, and then you start to hit like that 15, 20 mark, and shit starts to get wobbly, and, and you're like, oh, wait, what? It's like, well, hold on, what's going on here? And all these things start to, pile on, and then, things start to compound, it's like a gift and a curse. Business actually does start to pick up, but then you're not really prepared. You don't have the processes, the systems, people don't really know what they're doing. And it just becomes really just like this whole giant cluster that kind of collides. Yeah. And then, so then what do? You go, we need more people. So you hire more people, and then you get to like 25 and 30. And then it really just gets out of hand. And that was kind of like what exactly happened for me. And, and then, we just decided to keep hiring people. So we went to 40, then to 50 people.
Oh,
we were doing well, and we were making money. And, but it just, it's like I was working like 24/7, was exhausted. And then one day I kind of came into the office and I looked around and I was like, who the F are all these people? And who's that guy and that girl? And like, what's that person's problem? And what are they doing? And these 2 people aren't good people. And I really realized that some changes need to happen. At the same time, I went to this advisory group that I was a part of, and we were in Vegas where we all met, and we did a tour of Zappos in Vegas. And you can go do this. It's really cool. And we got the book Delivering Happiness. We got a tour. And it was the first time that I really like this whole culture thing kind of hit me in my face. And then I went back, and then Jen Lim, who wrote the book with Tony Hsieh, Delivering Happiness, just happened to be giving this speech locally that I got invited to by our bank at the time. So I went, and I said, we got to hire them. And I went all in on culture, and we made some major changes. And, through that process, we lost some people, but we gained some really new great ones.
Yep.
And then we just committed to like doing the right thing, putting people first, and making this a fun organization, but also like we're people get confused too, because we have a lot of fun. People see a lot of the stuff we're doing, they're like, do you guys just only have fun? And I'm like, no, we hold each other highly accountable, and we work really hard.
Fun
we don't we don't tolerate any BS, but we all like, there's no rule book that says you can't have fun. And so,
well, fun becomes the byproduct when you have that group of people that you want to hang out with. You mentioned Tony Hsieh, and I remember him talking about, even in the book, where he said one of their first hiring kind of processes when they started Zappos was the question, do I want to have a beer with this guy after work? Right.
Yeah.
Or gal after work, right? Do I want to hang out with them outside of work? And, I love that you mentioned Zappos. I'm a huge Zappos fan because of what they created over there. But there is something you mentioned that I think a lot of people, and I'm glad you didn't, I see a lot of people, business owners, who will overlook who the heck is this guy, because they're making what you said, we're making money. And people have this money fallacy, like making money means you're doing well in business. And it does. And I love that you even mentioned you were working 24/7. You have 50 employees, 50 plus employees, and you're working 24/7. There's something wrong, right? That's not the point. Yeah. The point of being a great business owner and having a great business is not to be working. I mean, it's so cliche and so old when we talk about working on the business versus in the business, or being a business owner versus a business operator, but it's so true. And being able to nip that in the bud. Number one, I love that you saw examples of companies out there that were doing it right, figured it something out, realized very quickly and can notice, hey, this is something different. I want that versus this, because the money is secondary. As you know, you've raised a lot of money. There's a lot of ways to make money. But if you're doing it without people around that you want to be around, then it's just not worth it. So I'm so glad you told us that part of it, because I think a lot of business owners get trapped in that I'm making money conundrum. and are willing to put up with the junk or the crap. And especially nowadays, and you probably see this too, where it's like, I'm going to torture myself with these people because I'm just looking for the exit. I'm looking for the sale. I'm looking for the buyout instead of actually enjoying what you're doing and loving what you do. And life's too short not to. So the
Yeah.
other,
Yeah.
sorry, I'll let you.
Yeah, no, 100%. It really what the whole thing is like what that real shift that started to happen was I said to myself, like, I come to the office every day, come to my, place of business, and I spend more time here than, with my family. And I'm like, I don't want to build something that I can't show up to and not be proud and happy around the people that I'm working with. And so for like, it's like, wow, to show up and want to avoid people.
Yes.
It's like that's like, didn't make any sense to me. And I made money with a small team, with a big team, but if I'm going to deal with all this BS and not have a good group of people that are like helping each other, looking after each other, and, proud to, come to work and all that good stuff, then like, why build this, big thing? So,
Yeah, I actually believe that sometimes the status in your mind of success actually shifts because you go, oh, so before I used to think that the status was having all this money and making, whatever goal you have financially. But once you start hitting those things, and probably even a little bit before that, I think a lot of people start realizing, all right, so this isn't all it's cracked up to be. This is actually a celebrity issue that pops up a lot. There's a collaboration, or not a collaboration, a collage video that has like Lady Gaga and these other people from like How I Met Your Mother and all these other celebrities who talk about how they always thought having a successful show or an album or whatever, or having all this fame was going to make them happier. And they realize very quickly
yeah,
that it's not. And I think
yeah,
we, as entrepreneurs, is we think, oh, if I hit this goal of finances, then that's going to make me happier. And then we realize, oh, it's not. I need to have the people around me. And the point that you talked about of walking in and wanting to try to avoid people, I talk about that a lot with owners and saying, listen, when you need to let somebody go. When you walk in, say hello to somebody, they say hello back to you, and the next thing in your brain is, boy, I wish you'd quit. Right? When you are having that conversation on your own, it's time to let that person go because you're out of integrity with that. But you're just not happy. And you want to have a place where you want to go to because all research shows when you're happier, you're more productive, when you're more engaged and having fun at work and enjoying what you do, you're going to be better at what you do. More options are going to come your way. So I'm just so glad that you figured that out. I wanted to shift a little bit to you talked about we do all types of lending. Do you have a specialty? Do you focus mostly in the tech world? You mentioned the restaurant. Is there certain specialties? Are you kind of open to everything? And have you seen?
yeah, yeah, yeah. No, it's a good question. We do all industries, so yeah,
Okay.
we're all industries, all 50 states. We do have like some core industries, like wholesale distribution, manufacturing, restaurants, medical, e-commerce, tech,
Do you have
and
any that are like the craziest?
construction contracting.
What's like the craziest you've seen that you're like, oh wow, I guess we can try to get money for that? Like, is it?
I guess cannabis has been like the newest,
Yeah.
interesting. When I first got started 16 years ago, if you said, "Hey, you're going to fund a pot business," I mean, I don't think I would have, I don't like, I didn't think that would be possible, or be
That's
anything that I ever would have done, right? And that wasn't even a thought back when I started, right? So,
well, what's funny about that is I just recently had my first cannabis client, right? So I deal primarily in private practices and things like that. I had somebody call me up because they were actually talking to their therapist about how frustrated they were with their business. And their therapist was married to a previous client of mine, unbeknownst to me or him. And he's like, hey, you should probably go read this guy's book because he helped my wife out with her business. And sure enough, I worked out. But yeah, it's an industry that's definitely growing, needs private funding, right? Because banks won't touch it.
yeah, yeah,
And
absolutely.
I bet it would be very, very smart and lucrative area for you. So that's interesting. So cannabis. Any other ones that you're like, oh,
Um,
interesting? I didn't
I
expect that.
mean, we always get these like weird random businesses that you like. it's amazing. I'm doing this for 16 years. We've done tens of thousands of transactions, and you still like will come across like this niche business that like you're like I didn't even know there was a business for that. Just random stuff. We funded like a pet crematory business, which was just, I
Oh,
mean,
interesting.
there's a need for it. I mean, random. I never even like thought about that.
That
That's like a really
that
weird.
industry in general is huge, right? So that's
Yeah,
like hailing in there.
yeah,
Yeah.
yeah. And there's always these just nichey things that you just don't think about.
And have you found that right now, like you mentioned a little bit, that money, obviously in the traditional sense, it's getting a little bit more expensive. What are some of the biggest hurdles you're seeing people having to jump through or jump over in order to get that lending? Because if you have a company like a pet crematorium or even a cannabis, I'm assuming there's not a lot of data out there, but yet the lender probably wants to have some sort of interesting data to help them realize this might actually come back to them. They might get their investment back.
I mean, it sometimes it all really depends on the lender. And that's what people don't understand. All lenders operate, differently, and it's so confusing. We do this every day. We process over 1,200 loan applications per month,
Wow.
for business financing, and we work with a number of lenders. Some of them are the greatest, oldest lenders in the country, that have funded billions and billions of dollars. And you probably have never heard of them, but they're always shifting. Guidelines are changing, markets are changing, so it's really hard to keep up with. What's happening right now is banks are extremely tight. All of banks' money, are a lot of, not all, but a lot of banks' money are right now like they've moved a lot of their money into treasury bills, and they're collecting 4 to 5% interest in treasury bills. It's super safe. They're earning great interest on billions and billions and trillions of dollars. And when you move money like that out of a bank has to have so much cash reserves on hand in order to lend. So a lot of the business lending happens from regional banks, and it also happens from some of the bigger banks. Typically, the more bigger brand name the bank, the more bigger transactions they want to do. So most of the big top brand name banks that all of us would know of, top five, core banks in the country, want to do deals 10, 20, 50, 100 million and higher. So
Wow.
it leaves this big gap for deals, 10 million under in the typical small to medium sized company. Then you have to have like really great assets, which are B2B receivables, inventory, and then the obvious is real estate or big machinery that they can use as collateral. There's a lot of businesses that have great businesses, great credit, great cash flow that don't have assets. They're selling to direct consumer. They don't have real estate. They don't hold inventory. They don't have B2B receivables. So
Yeah.
almost automatically you get knocked out from a bank. Think about all the local contractors. Think about restaurants. Think about even doctors. And then so many companies that are just doing like direct to consumer stuff, retail. So there's so many businesses that really in a bank's eyes aren't great credit. But then separately, when all these banks now, the regional banks, money's moved from their banks. People got freaked out when the bank run happened last year and moved their money into what they called safe banks, which are the big brand name banks. So all of these banks' balance sheets are very cash restricted right now. So every loan that they do, they need to have to balance out their cash reserve. So if they do more lending, they have to go pull more money into their bank. And if that starts to become out of balance, they get in trouble by the regulators, and they have to make sure they keep that in check. So banks are doing the cream of the crop deals right now because what they can lend on is very limited. And the cream of the crop means a lot of collateral coverage, right? And then so it leaves all of these gaps. And then you move to the non-bank lending world where pretty much 95% of the lending's happening right now. Last year, the year prior was the first time that non-bank lending passed bank lending, which is a big deal. And the non-bank lenders don't have the regulatory restraints. and they're more of like what old school banks were, where they're hands-on and could make their own credit decisions. They can look past the collateral. They can really focus on the business, the cash flow. And a lot of our lenders focus more importantly on the opportunity that the company's using the money for. So that's how, and some of them, like some, and some of these non-bank lenders just finance equipment, and the equipment is the asset. So trucks, restaurant equipment, office furniture equipment, manufacturing equipment, warehousing equipment, refrigerators. And they'll do that stuff at, 4 to 5 to 7 years at great rates. And then, outside of the real estate collateral, like equipment collateral, and then B2B receivables as collateral, then you go to lenders that focus on cash flow. You just continue to go down the chain from there.
So I would think that, and this is just my layman's understanding, is if traditional banking or traditional money right now through banks is more expensive, then I would assume private money is too. Does this stop? And number one, is that true? And number two, does this stop people from actually asking for that money, or is it subjective? Like,
well, it's all subjective, right? Because no matter what your deal is, whether you're getting money from a bank or from a non-bank, right? Typically from a non-bank lender, capital be more expensive unless you've got great B2B receivables or equipment or inventory. Then right now it's actually not that far off and very close to a bank because bank rates have come up so much. So we're doing non-bank deals that are very close to a bank deal, and without all the BS, the time-consuming aggravation, we're getting them done very fast.
Is it you have to be paid back faster though? Like, do you have longer terms or just as favorable terms?
Sometimes just is favorable terms, sometimes shorter terms, right?
Okay.
But what we talk about a lot, and we go through this exercise with the clients that we work with, every day. Whether you're working with a bank or a non-bank lender, it all comes down to your opportunity and what's the return of that opportunity, and then doing some math against what the cost of capital is. Now, what most people do is right now, prime rate is 8.5%. So if you get a bank deal and you're prime +2, a lot of entrepreneurs don't even realize this. If you're listening to this show and you have a line of credit from a bank, you most likely have a prime plus 2 to 3 type of structure. So your rate right now in your line of credit, whether you realize or not, you're paying probably 10.5, 11.5% right now to your great bank deal that, was once much lower. As those crept up, most people have that auto debited out of their account. They don't even realize that this has happened. We have that conversation almost every day with people that call in, and then they're blown away, right? So you're already paying it. It's SOFR is like 5.3-ish, it, fluctuates. A lot of those deals are SOFR +2 to 4, which puts you at 7 to 9%. So a lot of people don't realize that. But at the end of the day, a lot of business owners.
You need to explain what SOFR is.
SOFR replaced LIBOR. So now it's the I forget the acronym. It just blanked out of my
basically it's like the what's it called? ARP.
Yeah, it replaced the LIBOR. So it's SOFR. It's a secured overnight financing rate.
Okay.
Sorry, I just blanked. So SOFR is a little bit less usually. But the markup spreads are, have been higher. So SOFR +4.
Wow.
So if the SOFR rate's at 5.3,
be about 9.
8,
yeah.
8, 8 and change to 9. So, but my point is that a lot of times owners, and it's amazing. We have a deal right now. The rate will be 11% on some equipment, but it's going to be $10 million of equipment. And the owner was the entrepreneur, the CEO and CFO were getting really locked up on this 11%. And we said, hey, let's look at your credit line. So they pulled the credit line. They were prime +2.5, prime rate right now is 8.5%. They were already paying 11% on their credit line that they already had.
Oh,
Now, when you're seeing 11, like you didn't move forward with 11, you moved forward, prime rate was less. It's now crept up.
right.
But most importantly is they're building out a new facility. And by doing this facility, they're going to save like $2 million a year in a number of different expenses. So, but they're stuck on 11. We don't want to pay 11. They're just stuck in 11. So every month that goes by, it's costing them like $180,000, almost $200,000. So we went through the exercise and broke down the math and the savings. Every month that they delay this, it's actually going to cost them more money to do nothing. So what I really urge entrepreneurs, and this isn't a sales pitch for me to get your lending business, because you're going to move forward with it or not. Your deal is going to make sense or not. If you remove the emotion of saying, I don't want to pay this high rate, because listen, 11, 12%, that's high. I get it. But if you break down your opportunity and how much you can make in your opportunity versus how much the cost of capital is, if it's profitable and makes sense, then but you doing nothing will actually cost you more money.
Really?
And what I challenge people on is, if you're concerned about the economy or you're concerned about what's going on, then you have to take every opportunity right now that's profitable, extremely serious, execute on it as quickly as possible, and stack or save as much profit as you can. Because if we do go in a downturn, you're going to have that much less profit if you do nothing, right? And if we go into this crazy downturn, then no matter what you do, you're going to have to restructure, figure it out, and we're all going to get our asses kicked, right? So I don't run my life or my business that way. But when you really break these things down, a lot of it's this emotional thing that I don't want to do this or pay this. But if you're willing to do the math and take the time and put it aside, you have to make your decisions on the numbers. And that's a lot of other, places, in your business. And it gets overlooked constantly. I mean, and I'm not talking about like, companies that, are doing a few $100,000 a year, in revenue. We have this conversation with people doing, 20 million a year in revenue, 50 million, 5 million, and they're just, it just becomes this, like, most buying things that we do are emotional. I mean, think about that. Like,
yeah, it's all emotional. That's why we get stuck on 11%, right? Because like, man, I don't want to pay that high amount, but the logical side has to click in. And sounds like that's where you come in as even an advisor to them in some ways, to say,
exactly right.
Look at exactly what's going on here and why your cost of delay is going to be more than your 11% that you're going to be paying out.
Yeah, and there's emotion and ego. So so a lot of times we go through this exercise, people go, huh, and then they think, and then they make a decision to move forward. But there's a lot of ego-driven CEOs that just get stuck and don't want to do it.
We've been
that's on you,
place, right? All of us have been in this place of like, wow, money's so cheap, and it's been like for almost a decade where people have lived along. People are like, wow, I can get money even when it was at 4% or 5% or 6%. We're like, sweet. And so it just feels almost offensive and to some people to pay that extra, but because we're stuck on that number there.
But that's a good point though. But like the norm in business lending, was like 6 to 8%. And then we went down to 3.99, and it blew my mind when people would freak out about 5 and 6.
Oh, really?
Because I was like, this is going to get higher.
Yeah.
And I'm like, you better like lock in right now. And then people thought I was crazy. And, here we are talking about bank deals at, 8 to 12%. It's mind blowing. But, the reality is that was the norm in mortgages, were 5 to 6% for a very, very long time. And that was low compared to years and years ago. And on the business side, 6 to 8 was pretty normal. 3.99 we thought was normal. That was unnormal. That was like unbelievable.
Yeah.
And I don't think we're going to see rates like that. And the other thing is, we have people, I'm waiting for the rates to come down. All right, I'll talk to you in about 3 years. Like, right. And maybe 5. I don't think it took from the 0809 all the way to like 18, 19 to see those rates. So 10 years from that crash.
Yeah.
So I think that it's going to be a very long time before we see, rates in the 3s and 5s again.
Well, and to your point, you got to look at the opportunity cost, right? Are you willing to wait 3 to 5 years or longer? Are you willing to gamble on not starting your business, funding your business, moving your business
Or
forward,
growing? Yeah.
growing the business without or on the hope that maybe it will change? Instead, I'd rather kind of get used to what is so that I can actually make more money and focus on making more money. But are there businesses that you won't actually touch? Like there's a lot of crypto going around right now, startups. Are there businesses that you're
Yeah.
like, yeah, we're not going there?
No crypto. Um, no crypto. We don't do that.
In a NFT. You're not gonna.
Yeah, none of that stuff. None of that. Like that's just, that I don't think anyone really knows what that is. And what that's leading to. There's a lot of scams and that stuff. So that's not for us. Startups aren't really for us, but startup is an interesting word. Startups to some people mean I just started my company 2-3 years ago. A startup can mean I'm looking to start a business.
Yeah.
So the easiest way for me to explain this is we work with companies that have been in business as short as 6 to 12 months. But they have to have revenue. So we work with companies that are doing revenue. We have worked with, if you don't own a business but want to buy a pre-existing business, we can utilize SBA for that. So we can help you on that. And then if you are a company that has got an entrepreneur that's got a resume, you've been there and done it before, maybe you have a private equity, maybe private equity backed, you haven't started to generate revenue, but you have a contract and you need some equipment to get started to fulfill that contract, then we can you have to put some money down. We can secure the deal against those assets. We had a manufacturing deal. They had a contract from a big brand name, reputable company. If once they start manufacturing this product, they will start buying that product. So they were private equity backed. This entrepreneur has been there, done it. We financed a few $1,000,000 of that equipment. They had to put down some dollars to make everyone feel comfortable.
So as someone who kind of evaluates so many businesses on a regular basis, and we mentioned just a moment ago the advisor type thing, being an entrepreneur as opposed to just a bank or maybe somebody who works in a bank who's just sitting behind a desk, pushing the applications through or whatever, the underwriting. How does that give you a bit of a unique perspective when you are talking to these entrepreneurs who are trying to grow their business? You already mentioned how you'll kind of lay it out with them, or you said you have them go through an exercise. But where do you feel that gives you that unique perspective as also being an entrepreneur working with entrepreneurs?
That's a cool question. I think it's extremely helpful. It's like, if I'm talking with someone and then this comes from the top down, we've got a big team of people. So, I share all this stuff with my team and we really push and challenge our team to act and think like entrepreneurs and really not only just understand all the lending guidelines, but understand business. That's so important because by understanding the entrepreneurs that we work with, by understanding the business, by understanding what it takes to build the business, you can really you can understand like what they're trying to accomplish. And then it makes it easy for myself or my team to back in the right type of lender. Because like based on like where you are today and where you're trying to go, that right lending partner can make a really big difference.
Maker.
And what was that?
You're like a matchmaker, like a financial.
100%. We're like mega matchmakers, but and then when I talk with entrepreneurs and I started my company from zero, so I've been through it all from building out systems, processes, people, accounting, marketing, sales, all those core things that we all share in common, regardless of our industry. Usually we have really good high level conversations.
Well, and it's probably so assuring for your clients to be able to go, hey, you get this, you understand this, or what do you think about this? Or do you advise them even in ways of, hey, maybe this isn't the right thing for you right now, or maybe you should go for more money, or how where does your advising as an entrepreneur kind of end or begin?
Yeah, I mean, it doesn't, I mean, there's really no ending to it, right? Because we're all learning and growing constantly, and the market's, really just continuing to change, right? So I think that's really never ended. At least for me, it is. And I share that with my team. It's, when people come to us, it's for two main reasons. It's an opportunity or a challenge. You don't borrow money, and you don't need to borrow money unless you have a challenge or an opportunity. But, sometimes that challenge is, because your business is growing fast and it's creating a cash flow challenge. So just because it's a challenge doesn't mean that it's a bad business or there's bad things happening. We have companies that come to us that are having cash flow issues because they're doing so much work they can't keep up, and they need some sort of line of credit or facility, or capital to kind of help bridge those capital gaps. So it's really just trying to understand like what's going on in the company, what's limiting their growth, or what their opportunity is. And is it, I got to put more trucks on the road? Well, then we want to pull in an equipment lender. If it's, hey, I landed this contract and I got to go manufacture more things, well, then we want to finance some more equipment. And we probably need a line of credit to bridge the gaps from when you deliver your goods and then get paid 30 or 60 days later from like a Walmart or a Target, or wherever. So it's you have to like understand like, the business, how things move, how capital is moving in their business, and what their real growth plans are. And by understanding that, then you can start to talk about the different lending products that may make sense or also may be restrictive. So
That makes you really unique, kind of, again, advisor, but advocate in their pocket, right? To be able to say like, all right, so this is what we're thinking of doing. That they know you have enough, not only experience, but a depth of knowledge, a depth of a roster of people to go to, that when you bring them the lender, you're bringing them the right lender for what apparently their goals are and what they want to achieve.
yes,
And that's huge, right? Because if you do go to a traditional lender, in my opinion and my experience anyway, it's just literally I'm just a bunch of numbers and letters on an application, and that's it. They don't know what I'm really trying to focus on, my goals. They only know what they read. But I haven't ever had a single person, whenever I've looked at any type of funding, have reach out to me and be like, so let me talk about your goals, and hey,
yeah, it's crazy. Yeah.
yeah. So
It,
what a powerful advocate that is for you.
yeah. I mean, and there's such a disconnect that the banks, the people that work in the banks are separated from underwriting, and they don't really understand how it all works. And but understanding what the entrepreneur is looking to
Yes.
accomplish is really key to everything. And it's not about getting approved, it's about getting the right approval with
Right.
the right lender and the right lending product for your need. And you can get approved at one lender and go to another lender and get double or triple the amount of money with better terms. So just because you got approved somewhere and you liked it or didn't like it doesn't mean it might not be better somewhere else. But you know, you know, I think we say like in our office too. You go to an accountant to get your taxes done the right way. You go to an attorney to make sure that you're protected. And a lot of these things you could do on your own. You could put together your own agreements if you want to. You can do your own taxes, right? I prefer to use attorneys and accountants, so I know it's doing the right way. It's also, when you're dealing with financing, it's good to use, an advisor that really knows what's going on. But there's so many, like when I got started, it was most lenders weren't online and didn't have websites, and you needed to find them through advisors that had relationships with those folks. And if you didn't really find those advisors, you probably didn't find the lenders. Now there's so much more lending happening outside of banks, and everyone's got a website. So like, it's just so challenging to like, where do you go? Who does what? And there's so many niche lenders out there that really cater to certain industries or love certain industries, don't love certain industries. So we really just take the guessing game out of it and just save you time. And, in frustration, and, you submit everything to us, and then we, take that, package it up, and we will go to the right few lenders. And there's a lot of value in that.
Sure.
Most people really appreciate it, and, as an entrepreneur too, how much is your time worth? Even if you have to pay a little bit more, everything's an opportunity cost.
Yep.
And, your time, is obviously money. And then, missing out on opportunities could be, big money as well too. So,
wow.
Yeah, it's important.
That's obviously the reason why you are, I didn't mention this at the top of the show, but a lot of people talk about being featured on. I even have I'm featured on a certain thing, certain news outlets, whatever. But when you're mentioned in, the Forbes and NASDAQ and Business Insider, it's because of this history that you have, the knowledge that you have, and obviously the trust that you built up with people. And man, you just really given us so many great nuggets today. And I really appreciate you going even into the culture side of things, your own personal story there, all the way up to, who we can and don't help. And I think there's a lot of information and knowledge you gave us today. So I really, really appreciate it. I want to make sure people know how they can reach out to you and connect with you.
Yeah, sure. If you want to look, check out the company, you can go right to nationalbusinesscapital.com. And if you, please follow me. I do a lot of stuff. I also put a lot of videos, content out, just, outside of just securing capital, just things that I've done to help grow and scale my business. So the two best ways to follow me is LinkedIn or YouTube. And you go to linkedin.com or youtube.com / it's Grow by Joe. That's Grow by Joe.
Grow by Joe makes it really super simple. So yeah, make sure everybody goes and follows Joe, get more advice. I mean, this was just a 40-minute conversation, but gosh, you've already given us so much, so many ideas. And for me, even personally, I'm sitting there going like, oh, I wonder which ways I could use Joe and my own business in the future. Before we end, Joe, we actually do 4 questions we ask every single person on the podcast. 4 questions that are just rapid fire off the top of your head answers. Are you willing to play?
Sure, let's do it.
Awesome. They're all based on the role, ROLE, that you play. The first one is, what is the highest and greatest responsibility that you have on Earth?
In my business?
Okay. It's totally up to you.
I mean, on Earth, outside of business, obviously my kids and my family and raising them, right? In my business, it's, ensuring that I steer the company and the ship the right way, and create a place that where the business can continue to grow, but also the people that work in the business can continue to grow, and thrive and get to that next level.
Love that. Thank you. Next question is, what do you want as the ultimate outcome for your life?
The ultimate outcome for my life is, as I, when I grow up, I want to help work with other entrepreneurs to help them grow and scale their businesses. And that's really what fires me up. Obviously, I have created a platform where they can access capital to do it, but I want to be involved in multiple companies and help them get to that next level.
Love it. What do you consider true leadership to be?
Selfless, putting others first and not needing to take credit for things, and really putting that ego to the side. There is a time and a place for ego when you're running a business. And sometimes you got to, flex that ego, but, it's, I think putting that ego to the side and, and creating other leaders and knowing when others are better than you at certain things and being all good to admit that stuff.
Love that. Lastly, a little bit deep, but the fact of the matter is every single one of us will have a final day on this earth. What experience do you hope or want to have between now and dead?
I'm just I don't know if it's one individual experience, but I'm excited to watch my kids grow up and travel the world with them and show them cool places and see things that I didn't get to see when I was growing up.
Love it. That's awesome. What a great experience that will be too. And be able to share. Number one, obviously, as a parent, we always want to give our kids more than we had, but to be able to share that, and especially it looks like some of those experiences, sharing with them for the first time yourself and them, that'll be awesome. I hope that works out for you. Well, Joe, again, thank you so much for being here and sharing your experience with us. Everyone, Joe Camberato is our guest today, and what a great job he did with filling us with new information around the lending world, and for me, it gave me a little bit of hope. I mean, I wanted to ask that question about the cost of money, because it is, I think, a little bit out there in the world, especially in the news. If you go to a private lender, you're going to be paying so much more, and you're going to have worse terms. But really, it looks like this might be a great option for a lot of people, especially people who can't go the traditional route, or right now the traditional routes don't want them. So thank you, Joe, for being a part of this episode of Own Your Role podcast.
Absolutely. And remember, usually capital debt is cheaper than equity. So don't forget that. And thanks for having me on the show, Dino. Love the show. Love everything that you're doing.
That closing gem there. That's awesome. That's awesome.
Keep growing, everybody.
Again, thank you for joining us on the Own Your Role podcast, everyone. And again, thank you for sharing this with your friends and colleagues. Make sure you like and subscribe, get notifications for when we are putting out our next episode. And make sure you go follow Grow with Joe. We'll see you on the next episode, everybody.
Grow by Joe.
Grow by Joe. Thank you.
No worries.